Okay, now we're going to look at owner's equity, that part of the accounting equation. Assets equals liability plus owner's equity. And I've pointed out a couple of different times on the wall in the back, you've got expenses and you've got revenue, and how revenue increases owner's equity and expenses decreases owner's equity. So we're going to focus in on that owner's equity account and see how these transactions affect that account. Okay? So what we're going to do is we're actually going to, you've got this notes page, which is just the basic formula, your first pluses and minuses for those main classifications. Okay? What we're going to do is we're going to take this, we're going to duplicate it, and then we're going to really just break down the owner's equity side of that. Okay? All right. So we're going to, now I've got another clean sheet of paper, go on portrait, because we need the whole length to be able to get all these notes down. At the top, we're going to go ahead and start again with assets equals liabilities plus owner's equity. Okay, and here you got your T. Okay, and again, any asset, and the T for that is your plus and your minus. Okay, debits on the left, credits on the right. Okay, this is of course your normal balance. Your liabilities, so any liability okay, is a minus and a plus. This is your normal balance side. Debit on the left, credit on the right. Okay, this is not any different than what we've looked at so far. And then owner's equity. Debit on the left, credit on the right. This is a minus plus. This is our normal balance side. Okay, now what we're going to do is we're going to take this owner's equity and break it down. Okay. So owner's equity in itself is a plus and a minus, right? This is what we're looking at. Okay, this of course is the normal balance side. This is a debit, this is a credit. Okay, so we're just taking that, expanding it here. Okay, now we're going to look at the things that increase and decrease owner's equity. Okay, so here's our T. Things that increase owner's equity is basically revenue. Okay, and revenue looks like this with its T. Okay, and the plus is on the right side, the credit side. The plus is on the credit side. So they're both on the credit side. That means it's increasing owner's equity. Okay, and again, this can be sales. All right, that's what we're looking at. Okay. All right, on this side, and this right here, of course, increases owner's equity. Okay, over here, we're going to have expenses. Okay, and these are going to decrease owner's equity. So for it to decrease owner's equity, it's got to be opposite. So the plus is going to be over here, and the minus will be a credit. Okay, and then drawing is the same thing. Drawing is when the owner takes cash out of the business. So that means that we're decreasing that capital, that owner's equity, because he's pulling it out. And we always want to keep track of what he's put in and what he's taken out. Okay, so drawing is the account we use, and we usually have their name beside it too, to show how much the owner has taken out. Okay, so these reduce owner's equity. Okay, so just to put this in words, since expenses and drawing decrease owner's equity on the debit side, make sure you're getting all my abbreviations, the normal balance of expenses and drawing will be on the debit side. Okay, since expenses and drawing decrease owner's equity on the debit side, the normal balance of expenses and drawing are the debit side. Okay, and then over here, since revenue increases owner's equity on the credit side, the normal balance of revenue will also be the credit side, or be on the credit side. Okay, so here's some pictures and drawings, and then here's that same information in words. All right. Okay, so we'll go through some transactions from Michael Delgado again. If you will find in your papers, this is the one we actually did with Michael Delgado for lesson 2.2. So we may put this up here, lesson 2.2. Okay. And then you should be able to flip it over, and we've got blank T's on the back. So this can be lesson 2.3. Okay. All right. So back the way we did this earlier, where we're looking at the transactions here in the blue bars. Okay. And this is kind of actually a continuation of the previous ones. So on January 10th, we finished 2.2 on January 9th. So now on January 10th, we received cash from sales for $1,100. Again, pictures are really good here. Now you'll also have pictures here. Okay, but at least in your book, you've got the transaction with the picture. Use the book. I told you we're going to use the book every day. Okay, because it's got good pictures and it has all of our working problems in it. Okay, and of course, we've got Michael Delgado's chart of accounts that we looked at in the previous lesson, and that's like on page 3, I think, if we need to see that. Okay, so on January 10th, received cash from sales. So again, start thinking about what 2 accounts are being affected. Are they increasing, decreasing? What classifications are they? And is it a debit or credit? So received cash, $1,100. So we know $1,100 is increasing for cash. Oh, I wrote down supplies. Instead, did I say sales? I hope I said sales. See? Gotta love pencil. Okay. Sales is revenue, increases owner's equity. Okay? That increases debit side, credit side. Debit side, credit side. One debit, one credit. All right, January 12th. Sold services on account to Main Street Services. So Main Street Services is going to owe us money. So on January 12th, sales and accounts receivable for Main Street Services for $500. Okay, they owe us $500. We increased our sales by $500. One debit, one credit. Okay, and I'm going to tell you a little. Try to remember this. Sales will only ever be on the credit side. Anytime you have sales, it will always be a credit. Okay, we can't have a negative sale. We can only sell it. Either you sell it or you don't. There is no negative to that process. Okay, so sales will always be over here, which helps because then if you know that that has to be on the right and a credit, that this one has to be on the left and a debit. All right, and another one on January 12th. Paid cash for communication bill for cell phone and internet, so $80. So cash, and then this is one we usually have to look up. If we don't know, is it a utilities expense? Kind of what that's going to be. So if we go back to our chart of accounts, look at our expenses, right here, communications expense. Okay, again, we can't make it up. We have to use what is given to us by our accountants. Okay, so communication expense. Paid $80. Cash is going down. Expense, $80 there. Again, here's another clue. Expenses will always be a debit. So if you see the word expense, you know it's going to be a debit, so the other part's going to have to be a credit. Okay? And January 16th, received cash on account from Main Street Services. I'm going to keep showing that to you. Received cash on account from Main Street Services for $200. So now they're paying us some of what they owe us. Okay, so cash and the AR for Main Street Services. Received cash, it's going to increase. We're going to decrease what they owe us with the credit to accounts receivable. One debit, one credit. Okay, and then the last one for this is January 16th. And that one is Michael Delgado withdrew equity in the form of cash of $350. Okay, so it's going to affect cash and the drawing account. So this one again has his name, Michael Delgado, comma, drawing. Okay, he's going to take out $350, and we have to keep track of what he's taken out, okay, which is going to increase drawing, but remember that drawing decreases owner's equity. So in effect, it is taking out from his owner's equity, but we're using the drawing account with a plus on the debit side to decrease it. Okay, so $350 there. One debit, one credit. Okay, so that gives you some practice on looking at those transactions. Go through a few more on the working together 2-3. This is a lot of practice, so I'm hoping you got this down by the time we get through this next one right here. Okay. All right, working together 2-3. It's the same accounts from 2-2. Okay, and it tells you that for Jensen Cleaning from working together 2-2. So if you need to come back over here and look at an account, you'll have to flip back in your book. Okay, because they don't print those again for you here. But they are printing the transactions, and it's telling you to use 2T accounts for each transaction with the date. All right, so on March 11th, we are selling services on account to Johannes Eriksson. So accounts receivable to Johannes Eriksson. And the other account is a sale. Sold services. Sold services means it's a sale. On account means it's accounts receivable for $125. We're going to increase our sales and increase our accounts receivable, one debit, one credit. Okay? May 13th, received cash from sales. So again, cash and sales. This time it wasn't on account. There's, somebody just walked in the door and paid us. Okay, so we are increasing our cash to $60 and increasing our sales to $60. On the 14th, paid cash for the telephone bill. So cash, and again here, usually have to look at for what this is, look at our expenses. For a telephone bill, will be under utilities. Okay, we don't have a communication expense like Michael Delgado did, so we're going to use a utilities expense. For $54. Okay, and again, all expenses are always on the debit side. We're decreasing cash with a credit. So there's our debit, there's our credit. For the 16th, we're going to pay cash to the owner. No. 16th. Receive cash on account from Johannes Eriksson. So we made a sale here on account. Now he's going to pay us the whole $125 that he owes us. Okay, so cash and accounts receivable, Johannes Eriksson, $125. We're receiving cash. That's a plus. $125. We're decreasing accounts receivable with a credit. Debit, credit. And then the 19th, paid cash to owner for withdrawal of equity. Okay, so again, cash, and now our owner is John Jensen, comma, drawing, because he is withdrawing, so this is the account we use. Decreasing our cash by $200, and increasing our drawing so we can keep track of how much he's pulled out completely. So debit and credit. All right. Okay. Flip that over. Work through your transactions on your own for 2-3.